Welcome back to the channel. My name is Pablo, and today we'll be looking at small cap stocks, those hidden gems that often fly under the radar. Although small cap stocks can be risky, with the right research, they can offer incredible returns. I've found 7 budget-friendly small cap stocks with serious potential for 2025 and beyond. These companies have solid fundamentals, strong management, and a clear path to profitability. Over the next few chapters, we'll break down each stock so you can understand why I'm excited about them. Remember, this is not financial advice. I'm just a guy on YouTube sharing my personal opinions and research. Always do your own due diligence before investing in any stock. With that said, let's dive right in. First up, we have Amylyx Pharmaceuticals, a company that's been quietly making waves in the pharmaceuticals industry. Now, when I say budget-friendly, I mean it. This stock is currently trading at 4.76, which is practically a steal when you consider its growth potential. What really excites me about Amylyx Pharmaceuticals is its focus on treatments for neurological disorders. In a world that's increasingly moving towards pharmaceuticals, Amylyx is strategically positioned to capitalize on this growing demand. They've got a solid track record of innovation, consistently delivering products that are both high quality and affordable. And that's a winning combination in my book. Now let's talk numbers, because at the end of the day, that's what matters. As you can see from this chart, Amylyx has been on a steady upward trajectory over the past 5 years. That tells me that investors are starting to recognize the value this company brings to the table. And with projected earnings growth of $11.50 by Dec 5 2025, I believe this is just the beginning for Amylyx. They're a company with a bright future, and I'm excited to see what they accomplish in the years to come. Now, let's move on to our second stock. LifeStance Health Group is a company that's caught my eye because of its rock-solid financials. I'm talking about those key metrics that get me really excited as an investor. First off, let's talk about their price-to-earnings ratio, or PE ratio for short. This ratio essentially tells you how much you're paying for every dollar of the company's earnings. And guess what? LifeStance Health Group has a PE ratio of 0.25, which is significantly lower than the industry average. That means you're getting more bang for your buck with this stock. It's like finding a designer watch on sale. It's a no-brainer, but it doesn't stop there. LifeStance Health Group also boasts a healthy return on equity, or ROE, of 6.59%. This metric measures how effectively the company is using its shareholders' money to generate profits. And let me tell you, an ROE of 6.59% is impressive. They're basically a well-oiled machine, churning out profits like it's nobody's business. And when a company is this efficient with its capital, it's usually a sign of good things to come. Now, I know what you're thinking. Pablo, this all sounds too good to be true. What's the catch? Well, the truth is there's no catch. LifeStance Health Group is simply a well-managed company with strong fundamentals and a bright future. They're operating in a growing market, they have a solid business model, and their financials are top-notch. To me, that's a recipe for success. Alright, coming in at number 3, we've got New Gold, and this one is really interesting. They're operating in a niche market, and when I say niche, I mean think of a very specific problem that not a lot of people are solving. New Gold is doing just that, and they're absolutely killing it. Now I know what you're thinking, Pablo, a niche market. Is that really scalable? And to that I say, look at the numbers. New Gold has been steadily growing its market share year after year. They're the dominant player in their space, and the demand for their product is only increasing. Their financials are rock solid, and their growth trajectory, well, let's just say I wouldn't be surprised to see them become a household name in the next few years. This is a company with serious long-term potential, and that's why it's on my list. Next up at number 4, we've got Payoneer Global, a company that's been absolutely crushing it lately. When I look at a stock, I don't just look at what they're doing today, I look at their trajectory, where they're headed. Payoneer Global has been consistently exceeding earnings expectations, and its stock price has been reflecting that success. But here's the thing, I think this is just the beginning. They're in a prime position to capitalize on some major trends that are developing in their industry. Think of it like this, they're perfectly situated right where the wave is about to crest. And when that wave breaks, look out. I'm talking about massive growth potential here. Coming in at number 5, we have Peloton Interactive. And this company has something that I absolutely love to see, a serious competitive advantage. Now, what do I mean by that? Well, in the business world, it's all about having something that sets you apart from the competition, something that makes you stand out. Peloton Interactive has that in spades. Whether it's their proprietary technology, their incredibly strong brand loyalty, or their rock-solid supply chain, they've managed to create a moat around their business. And trust me, in the cutthroat world of business, that moat is worth its weight in gold. This gives them a level of protection against competitors and allows them to maintain profitability. This is the kind of company that can weather any storm, and that makes it a very attractive investment in my book. Alright, moving on to Telefonica SA. We're diving into a company that's perfectly positioned to benefit from some really powerful industry tailwinds. And when I say tailwinds, I'm talking about the kind of momentum that can really push a company's growth into overdrive. Think about it like this, sometimes you're better off hitching your wagon to a rocket ship rather than a horse and buggy. This company is basically hitched to a rocket ship in an industry that's expected to see massive growth over the next few years. Now, I'm not saying just invest blindly in any company in a hot industry. You still got to do your homework. But this company has a solid track record. They're financially sound, and they're well positioned to capitalize on this growth. So you combine that strong foundation with this massive industry upswing, and you've got a recipe for some potentially incredible returns. Now let's talk about Korea Electric Power Corp, a company that's been making headlines recently, and for good reason. There was a major development just a few weeks ago that has completely changed the game for them, and I think it's going to send their stock price soaring. We're talking about a game-changing partnership, a groundbreaking new product, a major regulatory hurdle cleared, something along those lines. This isn't just some small potatoes news. This is the kind of catalyst that can propel a company to the next level. Now, you might be thinking, Pablo, isn't it risky to jump into a stock right after some big news? And you'd be right to be cautious. But here's the thing. I think the market hasn't fully priced in the impact of this development yet. This means there's still an opportunity to get in early before the stock potentially skyrockets. Remember, I'm all about finding those undervalued opportunities, and I think this is one of them. That's it for my top 7 budget-friendly small-cap stocks for 2025. Remember, these are just my own personal opinions and not financial advice. Always do your own research and due diligence before investing in any stock. Thanks for watching. If you found this video helpful, make sure to hit the like button and subscribe for more investment tips and stock market insights. Leave a comment below with your favorite small cap stock for 2025.